Mortgage Rates Live with the Mortgage Calculator. My name is Nick Hiersche. I am the president and founder of the Mortgage Calculator. We are a lender that specializes in non-QM and alternative financing, as well as all your conventional FHA, USDA, VA loan programs. So I'd like to thank everybody for joining us today. I am joined by Jose Gonzalez, our sales manager. Yesterday he dropped out, but today we should have him able to complete the scenario that we were going over yesterday. So first, let's talk a little bit about that and what we're going to be going through in detail. So as we talked about yesterday, we want to go through an example of our non-QM loan program. So we go through this every day on the rate calculator, but I'll have Jose present an actual detailed breakdown here of our non-QM program, specifically for self-employed borrowers. This is really where we specialize and where our team shines. And these programs are up to 90% LTV with no MI. So Jose will show a couple examples of that. Therefore, 600 plus credit, up to 3 million loan. Typically, it's a 30-year fixed. We also have interest-only options available, and always requires 2 years self-employment, but we can use 1 year of income still in order to attain that calculation and qualify for the loan. So we also have purchase and refinance options available as well. So I will go through our standard stuff in a little bit. We'll have Jose come in and actually pull up a full example. And you'll see here on our rate calculator, we usually just show one rate, just kind of an indication. But Jose will be able to break down the full loan program for us. So let me go ahead and switch over to our rate calculator and share my screen again here. So this is our rate calculator tool. This is, again, for our mortgage professionals. This is for our licensed LOs in order to get rate pricing here. So this is a tool for professionals. If you want to get a full loan estimate, remember, please get with one of our licensed loan officers. We have over 300 loan officers. We are licensed in 15 states for primary, second homes, and your standard stuff. And we can do business purpose loans, which we love to do as well for our investors in pretty much all states. So please get with one of our loan officers if you're ready to make that move. But first, let's just go through the marketplace today so we can pull up some scenarios. So we always want to run through a standard scenario for an 80 LTV purchase. Typically, our customers are asking us to do a small amount of buy down. So this desired price means that we're going to get a rate with 1 point in discount buy down there in order to get a little bit better rate, which is typically our request these days. We're going to do a conforming conventional loan, purchase, 30-year fixed, as always, everybody's used to, primary, single family. And for all our examples, we will use Florida, Miami-Dade, which is where our office is based. And for all our examples, we will use a estimated 760 FICO, an estimated 40 debt to income ratio. So we can go ahead and check the rates here for this morning. So let's go ahead and see what options we have. So as I usually mention here, the Home Ready and Home Possible programs are specialty programs by Fannie Mae and Freddie Mac. Those are for borrowers that do qualify under an area median income. So those do qualify. They are a little bit different rates. So if you do qualify, please get with one of our loan officers. Rates are a little bit lower for those, but let's just scroll down here to our first regular standard conventional program. Boom, right here. Looks like this program right here, our conforming 30-year fixed for 1 discount point. Today, we're around 6.5. Yesterday, we were a little bit lower. There were some changes in the jobs report. So obviously, this morning, we're seeing a little bit of fluctuation in the rates. So again, if you're looking to lock in that rate or, lock in that loan, make sure you do it now after or before all of the markets react. Now, let's go back into our quick pricer and pull up some of our other options. So every morning we want to go through and just check out what the markets have. And the second option, if a customer doesn't qualify for conventional or conforming options, we typically recommend FHA. FHA is a great program that allows us to go beyond the debt to income limits that the conforming loans have, and also has some other lenient factors as well because it's backed by the government there, the HUD. So we're going to do FHA, 80 LTV, purchase, fixed, everything else the same as we just did before. And let's check out what our FHA rates are this morning for borrowers who may not qualify for a full conventional option. So, yep, you see yesterday we had a little bit lower than 6 options. Today, again, the markets have reacted a little bit, so the rates are fluctuating live, as you guys can see here. So it looks like one of our best rate combos here. It looks like a 6% rate for 0.875 in buy down cost. Remember, when you're looking at FHA programs, there are additional costs to consider, such as the mortgage insurance premium, even if it is an 80 LTV. So you definitely want to key in on the APR here when you're comparing conventional to FHA, or any of our other programs for that matter. APR allows us to compare all the programs apples to apples. So that's a great point to key in there. And you see we have just dozens of programs we can go with, even some of the specialty ones like the FHA 203K, if you need some rehab funds, all that kind of great stuff we have access to as well. But typically we want to just look at the standard one for the show here today. Now, what really gets us excited and what Jose is going to explain a little bit more detail here are our options that are for non-QM. So if a customer doesn't qualify for conforming or FHA or VA or USDA, I won't go through and quote these, but we can obviously quote VA instantly. If you do qualify, that's great. We appreciate your service. And if you do have a property that is in a rural area, we might qualify for USDA. So we can quote that. But typically, for a standard home, our options are typically conforming, FHA, or our loan officers have a plethora of expanded options. These are our non-QM options. This is what Jose will go into detail in a little bit. And we will go ahead and check some of these out. So for people that don't qualify for conventional or FHA, we have non-QM expanded guidelines. So we'll check it out for a purchase, fixed, 30-year fixed, everything else staying the same. And we have what pops up here when we do alternative income are our alt income documentation options. So we have a ton of options. Our most popular here that we'll price are going to be our personal bank statement 12 month. So 12 months of bank statements to determine a debt to income ratio. Keep in mind, these are only for our self-employed borrowers, as we presented a little bit earlier on our little advertisement there. These non-QM loan programs are for self-employed, but we're going to be able to use 12 months of bank statements in order to determine the debt to income ratio and qualify a customer who may not otherwise qualify. So these are our most popular options, but you can see here, and Jose will go through in detail a couple different options within here. There's about a dozen different alternative income documentation options we can choose. But just for the show here today, we'll choose the bank statement as the most popular program we typically do for a primary home, 80 LTV, everything else the same as we kept it before. So you see here, the non-QM hasn't changed much. So we just noticed that, the rates for conforming and FHA since yesterday's show have gone up a slight bit. But you see here, the conventional rates are right. The non-QM rates are right about the same. So that's an important thing to consider, is that non-QM is a different environment. It reacts a little bit differently to the rates and the market fluctuations. So you see here, we have some options. Obviously, I want to choose this. This is the lowest rate option we have, but there's an immense cost here. So I probably want to recommend anybody choose this one per se. I would recommend possibly this one. This is an alt doc option, meaning bank statements or other alt docs, for 8.25 rate for just about 1 discount point in buy down. So that's probably the best combo. You see, if you wanted save a little bit of points here, you can go up a little bit in rate. But we have just dozens of non-QM programs where we can use alternative documentation. So this is where our team excels. This is where Jose excels with 27 years of experience doing specialty type loans like this in the non-QM world. So Jose will go through a little bit other examples, in particular a P&L example versus the bank statement that we're looking at here, because there's a lot of nuances in these programs, right? But they do range from, obviously a little higher than conventional, but these are for borrowers who would not otherwise qualify. Now, before we pass it over to Jose, we always want to go through investments as well. So here at the Mortgage Calculator, we definitely appreciate our investor clients. That is probably our most popular loan programs are for investors seeking out rental properties. We do get a lot of requests for short-term rentals, Airbnbs, stuff like that. So we do specialize in that as well. But let's check out the general market for investments this morning. So let's try an 80 LTV conforming purchase with 1 point in buy down, but for an investment property. And we'll see what the standard conforming conventional programs are offering. Keep in mind that the GSEs, Fannie Mae and Freddie Mac, have added a significant loan level price adjustment, aka a penalty for these investment properties. So this isn't us. This isn't any lender. This isn't any of us in the industry. This is just simply the penalty that they've added. So we'll see here, while they have better rates than some of our non-QM programs, they actually have a very significant discount point cost because of those penalties that the GSEs add. So just keep that in mind. These conforming options are less popular now because of that. And you'll see in a minute here as we pull up the non-QM options for investment properties, we do have much more relaxed discount points. Of course, it's going to be a higher rate. Here for the conforming, this is probably the highest rate we can offer on this program. And unfortunately, it's going to have a lot of discount points here. So yeah, on yesterday's show, we saw the 7% rates for an investment. We're costing a little bit less than 3 discount points yesterday's show. So you see the markets have gone up on both conforming side on both primary and investment property purchases. So these are typically not what our customers choose for various reasons. So when we get a customer is looking for an investment property that qualifies full doc, that's great. This is a great option for them. However, we do have other options that make it easier and more flexible for these borrowers. So let's pull up our investment purchase options for an 80 LTV purchase. And let's go with our expanded guidelines. Remember, FHA, VA, USDA, those are only for primary homes. So when we're looking at an investment property, there's conventional investment. And then the reason that a lot of our customers come to us at the Mortgage Calculator is we specialize in all of these amazing non-QM expanded options. So for an investment property, we can use full doc, 1-year alt doc, 2-year alt doc, asset, business bank statements, and our most popular program by far, hopefully you guys have all heard of it, is our DSCR program. What that means is we're going to use the debt service coverage ratio as the income, and we do not have to determine a DTI. We do not need employment, and we do not need personal income from the borrower. We're just going to use the property rental income to cover the expenses for that loan. So this allows our investors to purchase multiple properties at the same time without worrying about any income documentation, cash out multiple properties at the same time to then purchase multiple rental properties at the same time. And in particular, this is a very great tool for our investors that are looking to purchase short-term rental properties. The DSCR is the program we want to use because we can use that short-term rental income, which obviously a full doc loan we cannot use because you're not going to use that income on your tax return or anything like that. Because you're purchasing a new property, we need to use the estimated rental income from that property, right? So this is the great program for rental properties, in particular, Airbnb type investments as well. Also, with our investment properties under expanded, we always include a prepayment penalty. That's just standard. Obviously, we can remove that if we wish, but there is a fee for that. So most of our programs are always going to have a 3-year prepayment penalty. So for the show today, just to show our general rate stacks, we will put that at 3 years. Remember, everything else is the same. We will see here that our non-QM DSCR rates are going to be higher. However, this has no income documentation, and obviously the points are less. So you remember on the conventional, it was around 7,125, but cost over 3 points in cost for that investor. So our investors are always trying to save money so they can purchase more properties and get more rentals, right? So typically our investor that may qualify for conventional will still use a DSCR program because it has a little higher rate. Even if the rental income covers that, it's not really a big deal. They're more concerned about discount points and LTV, right? You can put down even as low as 15% with some of our DSCR options, which may not be possible for a conventional loan, even if you wanted to, right? So a lot of our investors are choosing DSCR. As you can see here, we have dozens and dozens of DSCR options that vary. So please get with one of our loan officers to go through that. So now that we've gone through the daily rates for today, thank you guys all for tuning in. But let me pass it off to a more detailed segment. So I'm going to have Jose here talk for a minute. Jose is our sales manager. He is my mentor as well with 27 years of experience here. Has been doing non-QM loans for many, many years and really specializes in this and can really explain how a borrower who doesn't qualify for conventional or FHA, as I explained, can purchase a primary home under our let me pull the ad up again here, Jose, before we go into it. Just so everybody remembers, and I'll go over the basic terms. So Jose is going to talk about our non-QM loan programs for self-employed borrowers up to 90 LTV with no MI, which is a key point. Remember, on all the conventional loans, if you go over 80, you're going to have PMI. There's programs for 600 plus credit, even some a little bit lower, but Jose will talk about our premier programs here. Up to $3 million loan, 30-year fixed typically. We do have some interest-only options available on these non-QM loans. And 2-year self-employment is always required, but we can use 1 year of income documentation, which I think Jose will explain a little bit here. And again, this is for purchase and refinance, but I think Jose is going to present a purchase, I believe. So, without further ado, let me go ahead and pass it over to Jose, who can explain a little bit more about our non-QM programs.
How's everybody doing? Yes, got the technical glitches fixed today. So I like to say, because this reminds the one deal there where we got the our brand new MLO to close her $1.056 million very first loan, which was a P&L. And I like to say, from the ashes of the fire rises the phoenix, because that is exactly what we did in this scenario. And I guess I'll jump to that one a minute. In this scenario was an 85% purchase investment property. They tried to go full doc. Um, Full doc and not through us. Another lender tried to go full doc and they got shot down. And then when our MLO grabbed it, it was a lead that she got, and she tried initially was going to go bank statement, but after we reviewed it, we realized P&L was the way to go. And there is very little difference, just a little bit more work. So if you look at this right here, this is 85% loan to value investment property, single family purchase. And you're looking at very good rates here. It's 2 points is the buy down at 10 and an eighth, and it's roughly 3 points to go down to 9.375. And again, this is at a 15% down payment, no MI. And this is using a 1 year profit and loss, unaudited profit and loss. This is basically an income and expense compilation printed out by the tax preparer from QuickBooks on their letterhead, with an extra little signed letter of verification that it came from them, and verifying like a business narrative for the business and the borrower, and that's it. And you have the deal, right? So this option here is investment 85, and I'll show you bank statement 85%, so you could compare what we're talking about. But here, the bank statement option, slightly better rate and a little bit like $1,000 less in buy down fee, and an eighth of a percent lower in the rate with the bank statement, a quarter of a percent lower at the top here, at the same cost of 2 points. So again, this is for the bank statement option. Mind you, you do have to be, like Nick mentioned there in the flyer, you have to be self-employed. It's usually 2 years. Self-employment has to be proved through that business narrative letter from the tax preparer. And that's basically it. Very simple. No worrying about tax returns, no worrying about tax transcripts being delayed, no worrying about the borrower saying, oh my God, I'm going to have to pay $30,000 in taxes to the IRS because I want to save $200 a month on a payment. I mean, unless the issue is that they only have like 3% down, type borrower, well, then, so be it. But if they have for the 10% down and they were contemplating going anything other than this, and they're looking at their tax strategies, maybe they can keep doing their tax strategy how they've always done it, and they can take advantage of this program. Very popular. Now, if I show you primary, it's very interesting here. So primary, you're looking at, let's go bank statement. Now this is at a 90% also, mind you. So you can go typically as low as 8.625. This is at a 90%. So this is a little bit of about almost 3 points. I think I capped it on the buy down. And at par, you're looking at 9.875. And again, this is no mortgage insurance, only 10% down, and really gives a lot of flexibility to the self-employed borrowers that want to keep doing business as usual. So now you got here, I'll show you the difference now, side, P&L and bank statement, so you could refresh your memory. You're looking at 9.5 there with 10,688 in buy down, and you're looking at 8.625 with 11.25, and 8.75 with 10.125 in buy down. So those are pretty good options. And then if we compare side by side, the P&L, right? You got there 9.375 and the bank statement 9.25. So very, very good options. And I think I was seeing the statistics that bank statement loans are making up roughly 60% of the non-QM business because it's a very easy product. And especially, let's say you're a contractor, you're probably depositing $70,000 a month, $80,000 a month. Well, you can get the default 50% profit margin and have $35,000 a month as your income on the bank statement loan. Mind you, that contractor is probably declaring a loss in his tax returns because of all of the legal write-offs that they have a right to take. So there is no reason that they should not take those benefits that they have just to try to save a little bit on the down payment or to try to save $200-300 a month on the monthly payment when the tax liability is a lot greater than that. And what usually happens is that the loan originator that doesn't offer this option is because they don't have it. They do not know it exists. They basically are stumping their borrower from being able to close. And luckily, that's what we're here for. We're here to provide solutions at the Mortgage Calculator. We train our MLOs to be loan consultants, to analyze the situation, and to provide solutions with all of the tools that we have. We love doing our return on investment analysis for our investors, especially when we're talking about DSCR, because now they're looking at that, and especially when we're looking at short-term rentals, that really gets them excited. So plenty of opportunities with all of these loan products and programs that we offer. So definitely looking forward to working with all of you in the very near future.
Perfect. Well, thank you, sir. And thanks everybody for tuning in. Again, we are the Mortgage Calculator. We are lender licensed for primary in actually 16 states. We just picked up Tennessee yesterday. And we can do the business purpose DSCR in pretty much every state for our investor clients. So please get with one of our loan officers. Our website is themortgagecalculator.com. It's right below me actually here if you're watching. And we can send you a quote like Jose sent in just a couple minutes. You can see our team can get quote indications in just seconds on our website, but they can also fill out a full detailed quote as Jose explained there for you guys in just a couple minutes. So please get with one of our loan officers, and we look forward to doing some loans with you guys. Thanks, everybody.
Thank you, everybody.